when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, boys and girls, this is the S&P from the other day. You'll see we made a perfect 61% retracement last night down here at 59.42. The low was 59.44, and we've had a nice rally. We're trading a little below the 382 retracement right now. If we take a look at the, I want to get the other one up here, which was the Dow Jones. Hold on, I believe that's it right there. You'll see the Dow Jones from the low on the 20th of January. We made a perfect 61% retracement here at 4,400. Even the low was 44.02. And as you'll notice, we went up and we almost took this high out. We missed it by about two, well, still early. But anyway, we did that. Remember, that's only a few stocks, but it's still a few, and that really counts. Now, the NASDAQ went below all the numbers to see what was happening. But what I wanted to mention to you, the action that we saw last night, this is what really tipped me off that something exciting was going to happen. You know, we had this low. We were down 600 points, stopping right at the 61% retracement. Then our pullback here, right before the opening, was right at the 382. And I said, my God, there's nothing bearish about that. And look at this thing rallied all the way up here. We rallied from there. We rallied 550 points. These are really wild swinging markets, folks. So we've got to pay, very, very close attention to it. Now I'm going to give you a tiny bit of a, hold on. Let me see if I did something wrong again. Hold on just a second. All right, just give me 1 second, and I'll get her right up here so we can take a look at it. There's what I wanted to show you. This is how I got started doing this stuff, folks. 1986. I'm in Avila Beach, California, living with John Raffoni on the beach. I'm working as an expert witness for Gibson, Dunn and Crutcher and 3 or 4 other firms I can't remember off the hand, with Eddie Horowitz on legal things related to commodities and stocks. And I got a note from my aunt from Terre Haute, Indiana. My aunt Ida sent me a little note that said, this is from Ruth Miller. And Ruth, Larry, soybeans, August soybeans are going to go off the board at 706 per bushel. I don't remember the exact number, but it was a number like that. I remember Ruth because her husband and her son were 2 of my best customers at Drexel, and all during the years I was trading beans. They owned a 1,900-acre farm there in Terre Haute, and we made a great deal of money. I knew her vaguely. She was a college professor at Indiana State University in economics, but we really had very little contact. When I looked about a month later, it must have been about the middle of October, I looked over my desk, I saw that piece of paper. I went back and I checked that August beans went off the board at 706. I called her. She's down in Sarasota, Florida, and she said, yep, I got something here that you're going to like. It's how Fibonacci numbers and astrology work together. And I said, Ruth, I don't understand this astrology very much. She says, just come down. She said, spend a couple months with me. And I'm saying to myself, well, let me think about that. Well, a couple months, I said, I can't do that. Around the 1st of November, I decided to go down there and spend a week with her. So I got down there, and I told her right off the bat, look, I'm an old Catholic boy, and I still believe that false gods before me is one of the 10 commandments. And sure enough, she said, well, will you give me 2 hours? And I said, sure. And she says, tell me, where were the biggest things that you can remember in the stock market going back the last 150 years or so? Yeah, I said, I can do that. I said, first of all, it was 1937 with Andrew Jackson when he abolished the Federal Reserve, which didn't come back again until 1913. That was another big move. And there was a number 1913, and then there was 1918, which was the bottom of the stock market. market before it rallied into 1929. And then there was a low of the stock market in July the 5th of 1932. And then there was 1974. We had a big double bottom in the stock market that I thought was pretty big. And then, of course, in 1982, we had the pullback after Reagan had been elected. The market pulled back to a 382 retracement, has never looked back. And she said, well, he had this little stack of paper there. She started going through them one at a time. She started showing me what she was looking at. And each time that she showed it to me was what we call this stellium that Shane Smolian talks about, or I call it a conjunction of a whole bunch of planets. That happened on the 23rd of January, and that's when the DAX topped. It hasn't backed off much, just a few hundred points. But you'll notice here, this is what happened in 2009. It was the same pattern that we're looking at right here. And I said the rally would March 5th. It was going to rally for a great deal of time. Folks, that's what I think is going to happen. I don't know if it's going to happen or not, but I said if this market gets unchanged on the day, something's wrong. The Dow Jones went up and took out the high the other day by just like one and a half points, or something. Not 1.5, but 2 or 3 points. So this thing could turn around and go a lot higher. I don't know. All I'm telling you is this is what I'm looking at. I spent a lot of time going over all these things, and I compared all these, and it looks like it's ready to go down. But until we go below those lows we made last night at 618 on the Dow and 618 on the S&P, then I think it's still got a chance to maybe go up. When you hear the stories about all of a sudden coming out of the blue, here comes a Chinese company, DeepSeek or something like that, and it sounds like a COVID bat deal. It's what it sounded like to me. I don't know nothing about the fundamentals. I don't intend to, and I'm not going to think that I'm going to know any of that. Okay, so that's what we're basically watching. So I'm watching these markets right here to see if they, right now they're still in a bearish mode because they had it. Look at this. This is $20,000 in one day, folks, in the NASDAQ. Okay, this is 160 handles. That's 9,000 in the Dow Jones. Okay, this was 3,500 in the S&P, down, and 4,000 up. So we got volatility out. Very, very heavy volatility. Okay, that's what I'm trying to bring it across here, what we're watching right here. So when I try to give you these numbers and everything like that, by the way, Stan Harley will be as our guest on the market on today at 1:30. As you remember, the radio show, we didn't quite get him Friday, but he's going to be a regular show. And I remember telling you folks, it was right after the trading room that we had, and Stan said, boy, am I really bearish, as I was. And but that's neither here nor there. That sometimes they work, sometimes they don't. Anyway, that's what we're watching. The fact that it's started this way is basically, what I'm paying attention to. The other one that we were watching, and we're going to do the currencies, we're going to have plenty of time, but I wanted to show you the Treasury bonds because, we were looking at the market on Treasury bonds to have a little bottom down there, which in fact it did. Let's get the hourly chart up here so we can take a quick look at it. And I'll draw, wow, that is our opening gap. Boy, I didn't realize that. Let me, it probably hasn't been refreshed. I'm sorry. I'm sure it hasn't. That's it. Yeah, there it is right there. I was looking for this ABCD to form. Where was it? Right, this one right here. Well, it already has. Let's just get the daily up so we can see it clearly. We'll be right back, folks. 877-927-6648.
This year has already been a wild ride for the market. We started off heavily in the red, and now it seems like we may be traversing back to all-time highs. In short, this market has been a whiplash and requires constant pivoting. Where does the market go next? Should I add to this position or cut my losses? Where is the next opportunity? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 4 hours of live trading. Larry has been through many markets just like this one, and his insights are invaluable. The next event is this Friday, January 24th from 9 a.m. to 12 p.m. Eastern. If you subscribe today, you'll also be able to attend his session February 8th. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is the Treasury notes. As you can see, we made a 50% retracement of the December high. The last time we had a really strong rally, you see we went from 108 all the way up here to 111, 3 points. Okay, so we'll probably see that repeat. So if we move that over here, put it in right there, you see we're almost there right now. There's the 50% retracement. The Treasury bonds only made the 38% retracement because remember they had a larger rally here because there's more speculators in there and they have a lot more volatility. So that's what we're watching in both of these. But the market that you really need to pay very, very close attention to, folks, all of them, of course. But let's get rid of this. And get rid of this because we need to get down where the big daddy rabbit jumps, and this is where we're looking at. It's in the euro and the dollar index because these have been very, very active. Now we're going to go to the hourly chart so you can see what we really did now. You see we went up here and hit all these numbers. Remember that? And we went over last Friday when we were on the air. We talked about the importance of that 107 level in the dollar index. So if you come up here, and you'll see that we did break below that substantially. We're going to get it up here, put the daily up one more time. And you'll notice that we did. We shattered it. We came not shattered. We came down to 106.80, and now look where we are. We're right back to the old 618 again. So the dollar is trying to regain its strength, but it's having a difficult time. There's no question about it. The euro has only backed off a little bit from the high up in here, so we've had a pretty good run, but these are not related to what's happening with the bat people. Well, I keep calling them bat people. Folks, I get upset when I watch these people on CNBC telling you about all these things this thing is going to do. They don't know what the thing is, what it's all about. It's a small computer company out of China, for God's sake. No one knows enough about it, but they think they do, and I guess that's what somebody must know something. They sold the heck out of this thing. Anyway, that's the dollar index. We'll get that out of the way here. And you also want to look here at the British pound. I covered this in the video last night, because we were right up against some really major resistance here at this 1.618. It's only moved down a little more than 60 pips from its high, but it went right up to this level here and stopped, exactly where it was supposed to stop. The other one that we've been watching really close, and let's just clean these up a little bit because of the fact that they've got too many of them here, and I want to get the gold up because we've had some big moves in gold. I really thought that we had a chance to let's look at the 4-hour chart, because it looked for sure that we were getting ready to break this out to the upside right here. But that all changed early in the morning, and let me just show you where. If you looked at it early this morning, and we were watching it, there it is. This was the January run. This is early morning. This was Sunday night. I will just draw this over so you can see it. There's Sunday night's high. We were looking for a 382 on that one. You'll see the market came down, hit the first one right here, had a nice move down of about $2,000, and then it had a really strong rally. This was right into the open. We went from this high right here. We went right up above the 61 of 382, but not above the 61. But here was the opening. This is when everything started to open. The market came down strong, and then for a half hour, it ran straight up to the 382, bada bing, bada boom, and boom, down it came. And there was another tiny one right there. And I know they're small, but they're tradable, folks. If you're watching the gold, you'll be able to trade it, because these are half-hour rallies. This one hits it almost exactly, but this orange thing takes it away for just a second. We'll get out of the way. There it is. Misses it by $0.50, and now we're still moving down. Where should the bottom come in? We'll just look at this on that 4-hour again and see if we can come up with a nice 382 somewhere. Now, we're having a biggest retracement we've had since way back here. See that retracement? And that retracement are just about equal. So that's where you want to mark your first 382 retracement, is from this one. And we'll move over, and you'll see that we're probably pretty close to it, right? No, we're already through it. We're at the 50% level right now. And as we look at that, it looks like we have our old friend, Mr. Old H.M. Gartley's, none other than the old AB equals CD. There's AB. And there's equal to CD, and we are sitting on it now at 2733. So this is what we call a wide bar, folks, so be really careful. Well, you can be careful by putting a stop in. That's all you really have to do. That's the main thing of what we're paying sort of close attention to as we watch these things unfold here today. So let's move this out of the way here a little bit. And I want to show another one that we've got on our watch list is getting close. And I do mean close, because we're talking about something that is very dear to our hearts. This is the long-term picture in the old wheat. And I still think we're going to get this price level in. There's your A, there's your B, there's your C, there's your D. Remember, it's right around $5 a bushel. If you remember the long-term weekly, there's your AB leg right here. There's your CD leg coming in right here. 2 reasons to think you're going to make it to the downside is, look, you've already taken out last week's low by quite a bit. Okay, that was back on the 17th. And if you look at this, you'll see that you are trading below. You're already trading below the 786, so a really good chance that you're going to get down to this level right here at 523. Folks, they're not going to stop eating cookies and pizza and what do I always say? Cookies and pizza and something else. I think it's cookies and pizza and bread. Yeah, well, pizza's bread. Anyway, that's keep an eye on the wheat, and we'll see how that's going to unfold here before too much. Okay, now we had a question about a couple of stocks. I know one of them is Tesla. I'll look at NVIDIA too, but let's just do them by alphabetical order first so I can get them done here. Okay, the first one we're going to look at is NVIDIA, because it was down about 13% at one time. Today, well, it's still down quite a bit. And you'll notice here, this is not the end of the world in this. No, this is a bad tick. Let me get to this is not good data, folks. I'm sorry, but there's a big drop here. We're probably making an ABCD here, but here's a good spot to take a look at NVIDIA, folks, using ABCD. Okay, we know that if you have a big gap, you have to make the ABCD leg at least 1.27 of the AB leg, all right? So there it is at 1. So all we're going to do now is we're going to mark this right there, and then go over and change the size of the thing to 127% as opposed to the record. And there we are. It should have some pretty good support right in here, 117. There's your 1.618 expansion. Now, there's some trading that went on in here because the market opened here and has already come down quite a bit, so it's still moving a little lower and might go a whole lot lower. We don't know. This could maybe this thing that these dudes are doing in China is for real. So if we go back and look at the last low we had in NVIDIA, see, we're already below the 618 on that too, so that's another negative sign unfolding in that, okay? So I'm just giving you some information. That's all I'm giving you, folks. Don't know any more than that. Now let's take a look at our good friend Tesla, and we'll get, let's see, where is your Tesla at where we are? Here we go. Tesla is coming up here. Put that 60-minute up, and I'm sure it's under a little pressure today, but not much pressure. Tesla's holding up relatively well. Let's take a break here, and we'll be back with Stan Harley, folks. Tesla doesn't look too bad at all. It's actually down very little today. It's only down a couple of dollars. Looking pretty good. 877-927-6648. Stay tuned for Stan Harley of the Harley Stock Market Letter.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we have Mr. Volatility himself in the house, Mr. Stan Harley. How are we doing, cowboy? What do you think of this volatility? 600 down in the Dow, 700 up in the Dow. Oh, my goodness. Tell us what you're looking at, buddy. I know you were bearish Friday, and it certainly was down 160 handles at one time, but we're still down 120, so it's not doing much. But tell us what you're looking at, Stan. I'm not getting any.
Try this. I just
there, got it. I got it. There you go. There you go. We're in business.
Issues on my end. I apologize.
That's okay.
Let's take a look at some charts, shall we?
I'd love to do it.
First of all, it's been my view that the stock market is, of course, making a major top. That's kind of been the theme that I've been pounding home on the air with you here.
Yeah.
Let's take a look at some monthly charts, and some of these are a rehash of what we've talked about in the past, but I think it merits emphasis. This is a chart of the Dow Jones Industrials going back 50 years, back to the low of 1974, and what I found is every single high can be defined by this 150-month cycle, and it's Fibonacci perturbations. And I won't go through all of them on the screen, but you can see the August 87 high, the Jan 2000 high, all the way up through the present. So when I plug all those dates into a spreadsheet and turn the crank, it tells me that there's a cycle prevalent in the data series of about 150 months. The R squared of that, for those who have an interest in statistical analysis, the R squared is 99998. 1 would be a perfect fit, 1.0. So it's very, very close to 1. And the next recurrence in that cycle is due in the vicinity of December 2024 with a very low standard deviation of under 1 month. And remember, this is the Dow Jones Industrials, and the Dow so far peaked on December the 4th. In fact, I was on the air with you on that day.
I sure were. I remember.
Separately, I've taken the same data and uploaded it into the cycle scanner produced by the Foundation for the Study of Cycles. And what this does is it extracts all of the cyclical parameters from a data series and rank orders them with their AI routines. And what it has determined is the dominant cycle from the scan is 41 months. You can see where my mouse cursor is. That's the big number 1 here. And then I plotted it on top of the price plot for the Dow Industrials. And as you can see, this does a dandy of job of picking out the tops. It is the best mathematical fit to the data series going back a very long time. And as you can see, we are in a topping zone right now as we speak. That cycle has been around a long time. Edward R. Dewey, the founder of the Foundation for the Study of Cycles, wrote in his book in 1941, the dominant cycle in the stock market was then 41 months. And here we are in 2025, it still is 41 months.
Wow.
Let's drill this down to the weekly data, Larry.
Okay.
And I've shown this before, but I've just recently modified it just a skosh. This is a weekly plot right up through about 30 minutes before we went on the air. And what I've done here is I show the weekly price bars of the S&P. And then in the upper left-hand corner, I put a chart. First column are the Lucas numbers. The second column, I multiply the Lucas numbers by 2. And in the third column, I divide the Lucas numbers by 2. And this is something I haven't mentioned on the air. It's kind of been a proprietary thing, but what the heck? Let's go ahead and show it on the air. I find that the Lucas number series are by far and away more important in terms of determining what happens on the x-axis, i.e. price in Fibonacci, and more importantly, not just the raw Lucas numbers, but their ×2 and ×1/2 multiples show up time and time again. Okay, let's just take a look at this chart. Let's start with the March 2000 high, and let's count forward in time. And as you can see, the high in October of 07 occurred within 4 weeks of being exactly Lucas 199 ×2. And again, we had that same function that defined the May 2015 high. And I had previously theorized that the high following the Jan 2022 high would be about 152 weeks. In other words, Lucas 76 ×2. But it's gone a little bit further. And then I had an aha moment. I said, oh, okay. Well, the operative function here is not Lucas number ×2. It's actually Lucas number ×1/2. So Lucas 322 ×1/2 is 161. And that aligns with the high that occurred on Friday very, very nicely. Very nicely. Wow. Now this is where it gets even more interesting, Larry. And I ran this off about 30 minutes ago. When I input all of the weekly data into my spreadsheet, and I compute what I call price velocity. Some technicians refer to this calculation as momentum. Some call it rate of change. I'm an aerospace engineer by trade, so any measurement of price versus time, I correctly call price velocity. It's essentially a look back over time. And so I look back 3 time periods, 7 weeks, 14 weeks, 27 weeks. I make those calculations, and I plot them all on the same graph. And there's a reason for doing that. But the short version is, let's just take a look at it. And notice this, the bottom in this price velocity measurement occurred back with the low that occurred in October of 2023. And then following that move, we had 1, 2, 3, and most recently 4 pushes by the S&P 500 in the new high ground. But this is what is interesting, Larry. As price has moved higher with each continuous pulse, notice the price velocity or momentum or rate of change, depending on how you want to look at, has produced progressively lower and lower peaks. You know, as a technician, what does that mean? Divergence. And then look at this. This is the January 24th high last week, and here we are this week, we're even lower. But this price velocity can't even get off the floor. It's still going.
Stan, we gotta pay a few bills. Stay with us, buddy. We'll be back in 3 minutes with Stan Harley, Harley Stock Market Letter, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back with Stan Harley, the Harley Stock Market Letter. Please continue, Stan.
Larry, I continue to marvel at that picture of you on the screen. You are one handsome dude.
Yes, that's a curse I've had since I was 12. It lasted till I was 12 and a half. Go ahead, my friend.
Here is a weekly snapshot of the S&P 500 going back a few years. And what I've done is on top of the price chart, I have overlaid these lines. They are spaced at Fibonacci intervals of 0.382, 0.618, and 1.00. And I put the zero line right on the high that occurred on February the 19th of 2020, and the 0.382 line right on top of the price bar that occurred on January the 4th, 2022. And guess what? 1.00 lines up with now.
It's going to be interesting, that's for sure.
This is the December 4th top that occurred actually in the Dow Industrials, not the S&P 500. But tops don't occur on a dime. What they typically do is they tend to spread out over time, and I'll go into that in just a moment, but I wanted to show one more chart before I get into that, and that's this one. This is a cycle I've shared with you and the viewers a lot during our programs here on TFNN. This is a cycle that has dominated all the major highs in the market going back years. It's 80 trading days, but this cycle, like all market cycles, it's not a fixed beat time clock. It expands, it contracts, sometimes it skips a beat. It hasn't skipped a beat yet, but it has expanded a couple of times by 2.0, and the most recent recurrence expanded by a Fibonacci 1.618. A couple of months ago, I did not recognize the 1.618 expansion. I thought it was going to go just a typical 1.00, and that aligned with around November the 11th. We had a modest high at that point, but not a big high on the charts. And so did the cycle disappear? Did it expand? Well, didn't know that until recently, but when I plugged 1.618 into my spreadsheet and turned the crank, it says look for the next recurrence right around Jan 23. And so far we got a high on January the 24th. Standard deviation is 3 trading days, and the R squared is 0.9999, meaning that is a very, very good fit to the data series.
Okay. Wow. Yeah, something's going to happen. Well, we've had something happen already, down 160 handles overnight, and it's jumping around all day, that's for sure. What do you think? Do you follow the news about this thing with the AI and this program that came out of China, DeepSeek, supposed to change the world? Do you follow any of that? Because that's over my head. I don't know if I don't follow the news at all, so I don't think you do either. So let's move on to something else.
Well, I do follow the news, but I'm a technician, and these cycles, these Fibonacci relationships, these Lucas number counts factor more into my form of analysis. And then, simply put, I also look at the interplay among what I call the Big Five indices. The Big Five are the Dow Jones Industrials, the Dow Jones Transports, the S&P 500, the NASDAQ Composite, and the New York Composite. And what I want to do is I want to look at the interplay among those five, and what happens when the top is formed. Typically early on you get all 5 of those going to record highs, and then over the course of the next several weeks, maybe several months, you get one or more falling off the new high list. So what has happened in the recent past? Well, back on November the 25th, we saw the transports peak out. Actually, their all-time high was back in 2021, but they came very, very close to eclipsing that. Then a few days later, on November 29th, we saw the New York Composite and its companion advanced decline line peak out. On December 4th, the Dow Industrial saw their high. December 16th, the NASDAQ saw its high. And then on Friday, we had a solo performance by the Stop and P, went to new high ground. What's going on here? Well, we have a classic thinning in the advance, where as the top unfolds, as the top matures, fewer and fewer stocks, fewer and fewer indices, fewer and fewer components comprising what I call the Big Five are making new highs. So at the tail end, the final cycle top, we only had one component among the Big Five go to new high territory. Now, if the S&P or one or more indices goes to a new high, then all bets are off. But right now, the evidence to me, looking at all of this, Larry, the evidence in my eye makes a very, very compelling case that we've probably seen a major top in the stock market.
Okay. Makes sense to me. Looks that way. Of course, if we go up and make new highs in the next day or two, then we'll both be wrong. But we've been wrong before, but we'll still be in the game. That's for sure.
Absolutely. And it's not about being right or wrong. I believe it's about having a competent method of analysis, recognizing this game we're all in of market forecasting, financial forecasting has inherent uncertainties and variables. And so what you and I are data scientists. We look at the data. We look at all of these things, cycles, and I know you look at planetary alignments. We look at all of these things, and we make our best educated estimate about what we think is likely to transpire. It may not. That doesn't mean the analytical process is flawed. It just means that some new data has come in that's going to alter our prior decision. We do that. The Federal Reserve does that. People looking for cancer, the cures for cancer, do that too. That's a part of the process. So to fault someone because their original interpretation of the data proved not to be the case, I think is a bit unduly harsh and just reflects a lack of understanding of how the process really works.
Makes good sense. Well, listen, we want to thank you for being our guest today and alerting us to what was going to happen over the weekend, and it certainly transpired the way that we thought it was going to do, with the exception of the Dow Jones. They didn't get the message, by the way. I was late getting it to them, so maybe, who knows? I mean, can you believe that we made a new high in the Dow by 2 points or 3 points today? I mean, I was shocked, but they did it, so it's one of those indications that who knows what's going to happen next. Stan, how do the folks reach you if they want to like a copy of your letter?
Oh, well, I have some contact info I can put back on the screen.
Okay.
There it is.
Thank you for joining us, buddy. We'll have you on again soon, okay? Stan Harley, folks, the Harley Stock Market Letter. Stay tuned. We'll have a little recap here. What's going on in the world?
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, you can see the Dow Transports. We had a perfect Gartley here as of Friday, then opened a little lower today. And then the market, extended its move up to the 786. That's a very bullish sign. We're still sitting below the 382 here in the S&P, as you can see. We're almost making new highs in the Dow Jones right now. That shouldn't be hard to do. My gosh, we're only 40 points away. And here's the NASDAQ is below here. So you've got 500 stocks in this one. You got about 30 stocks in this one, you get about 20 stocks in this one. You got to pay your money and take your choice. So we'll see what's going to happen here. But it's very, very interesting, the fact that we can go down 600 and up 700 with, and of course, it was this was the reason right here. It came right off of those 618 numbers. I mean, that's really hard, really not very hard to realize. That happened when I was taking those 30 minutes of sleep that I get every night. It was real early in the morning, and then boom, when I came in, it was still sitting around here, and then I saw the low, and I said, uh-oh. And the first thing I started to do was look for little 382s, and I certainly found one. I pointed it out to you. We'll move it over here a little bit here. That was the one right in here. This was the run right at the open. That was a 382 retracement right there. And I said, wow, that's why it's probably getting ready to rally. And you can see it went right there and then bang. Folks, that right there, 350 points in the opening 15 minutes in the market. Somebody was in there wanting to buy stuff. So that's the reason. It's all Dow stocks. Now, you see that didn't happen here with these. These are still been getting hit all day long with sells. So we got one market going up and two markets going down. So you pay your money and take your choice. I'm sticking by that forecast that I made. This is a big top. And we're going to find out if it's going to be right over the next few days. So live every day in an attitude of gratitude, and may God bless. And our guest tomorrow will be Mr. Silence himself, Norm Winsky of Astro Trends, one of our good buddies. We'll see you tomorrow, folks, and may God bless.
Steve Rhodes